So a couple key things to talk about in today's video, especially going into a light week. We only have 4 trading days because of Labor Day weekend. The first thing I do want to focus on today is the S&P 500. So on SPX, we saw 2 rejections off my 4,525 level from up here. This is going to be a key pivot going into this week. If price were to be able to get above decisively, then we'd see it rise all the way up to my key supply zone up here. What is critical about this supply zone is if you see a break above this range is roughly 4,550 to 4,575, then that will, one, fill the gap from over here, from back here on August 1st, which would mean that we are likely only going to see a higher low pullback by the end of the month, followed by upside afterwards. Otherwise, as long as we can remain below this supply zone, which is my base case at the moment, as long as we can remain below this supply zone, we can see extended downside likely would start either end of this week or the following week, all the way back down to the previous lows that we made at the start of this pullback / correction on August 18th. So very key range up here. One of the confirmation signs or signals that you have to look for in terms of a new downtrend beginning would be, one, a break below this broadening wedge pattern. This is the pattern that we broke below previously, but went back into, as you can see with this large green candle. This is the one that I was looking for upside into the end of last week. And we did end up getting that upside to my 4,525 pivot. If this breaks, especially this week, then we can see a lot more downside. And then the very key level will be this 4,478 to 4,485 range. This is a key demand zone. It's more so of a minor demand zone, but still will be definitely crucial because if price can break below this, then we'll see a lot lower price discovery afterwards. So this 4,500 to 4,550 range up here in between both of these zones that I have, the red zone and the purple zone, it's going to be very crucial this week to watch which way price breaks. At the moment, we are between both of them, but watching for confirmation under or back under the key level that I just provided right here would mean confirmation of further downside. And of course, if it were to go to the upside as well, you do have to watch out for that gap fill. This is basically your stop out from up here. So personally, like I said in the previous video, I am looking to go short at some point this week or early next week at the latest. I'm planning on going short in between this range. The highest end would be around this 4,550 / 60-ish level, so the lower end of the supply zone. And then also I could potentially go short with confirmation under the levels that I provided right here. So there's 2 scenarios on that short side, because personally, I still believe we are due for an additional pullback into the end of the month. However, always good to have a stop loss strategy in place. And of course, that stop loss would be a gap fill with that confirmation roughly above 4,575. So you do not want to see, at least if you are bearish for the remainder of the month, you don't want to see price close back up above this level. Keep that in mind. This is a very key point that I'm trying to make in regards to this entire sequence that I'm expecting. You do need to make sure that price doesn't go past this level up here. As long as it remains around here, it can consolidate for all it wants, maybe even consolidates this entire week, because we do have a shorter week. Sometimes that means less volume overall, and you just see price chop or just slowly grind to the upside. As long as we can remain below the supply zone up here, then we are setting up for some form of a sell-off, especially by the following week. So next week, because there is CPI upcoming as well, it's another catalyst to watch for. So I know I just threw a lot of levels at you, but keep in mind, for my short thesis to play out, especially going into next week and that CPI, like I just said, we do need price to remain below the upper end of this supply zone. If that is to be the case, especially throughout this entire week, then we can see a further downside, which ideally by end of month should take us back down to the lows, potentially even lower that we made from August 18th. So it's going to be very crucial, especially this broadening wedge pattern this week if we do see a breakdown. But other things I do want to talk about, and this will actually complement what I just said on the S&P 500, looking at QQQ here, 382.46 and 383.29, 2 critical levels that you're also going to want to watch this week. I do not want to see a close above this. So very similar to the SPX 4,575 kind of stop out level, or level you don't want to see surpassed for this pullback thesis to work out. It'd be very similar on QQQ, this range up here. These are 2 critical pivots that cannot be surpassed in order for price to pull back from these levels, because so far it's been tracking nicely. We did have that pop, an aggressive pop to the upside last week. I was waiting on this pop because it would provide us a nice opportunity to short. Now we're entering that time zone roughly this week and early next week. Like I just said, we're entering that time zone where there's a short opportunity and for a lot of points as well. And with that, it's always good to have good risk mitigation practices in place. So 382.46 to 383.29. You don't want to see an hourly close, definitely not a daily close above this range. This was a previous supply zone / distribution zone actually before the large sell-off that we saw here during this pullback back in early August all the way to mid-August. So this was a previous zone that we saw a lot of distribution at. You don't want to see a break above that if there still is to be a bear thesis into the end of the month. So also keep that in mind going forward. Additionally, do want to talk about IWM here. Beautiful rally to the upside. This is one that I was talking about all the way back under 184, around the 183 to 184 level. Back on the previous Sunday video, we did have a very nice bounce from the downward trend line as well as golden pocket convergence on the Fibonacci sequence here. So we're all the way back up into the high 190 to 191-ish range. So very nice bounce for this. Personally, not interested in continuing to hold my position, at least for the short term. I'm all out of my long that I took from back here around this bounce zone. So it can continue if it wants to the upside. Personally, I actually believe long term, or at least into end of year slash Q1 of 2024, I believe this is a good setup for continuation to actually take out the highs that we had previously from up here. But at the moment, for the short term thesis, I'm not interested in continuing to hold. Very nice move for about $7 to the upside. So nothing wrong with that by any means. And I do also want to talk about Tesla today, because that's another one that I mentioned in the previous video, because we did see a rejection actually on Friday. And I just want to look at the flow here really quickly. So what you'll notice is there was a lot of call selling on Friday for Tesla, specifically even early in the session. Look at this. All of these calls being sold below the bid. So definitely these whales wanted to get out of their position or potentially collect premium on this position if they were selling to open. This was a little bit difficult to tell if they were doing either of those just because the volume and open interest was already very high, because these are very liquid contracts. However, what we do know is this typically is not a bullish sign to see this sheer amount of calls being sold, especially within a shorter term expiration. So if you look at the chart over here, you can see we did reject off of my trend line from up here. If you remember the previous Sunday video, I was looking to go long because it had a nice close from back here. We did gap up. It retested the downward trend line that I was talking about. And then we had a very nice upward move to my next trend line up here in the high 250s. And then we actually had a rejection off of this. So what you can notice is, based on flow data, within the first 30 minutes of the session, there was a clear trend of bearishness overall, because a lot of these calls were being sold, like I just said, at the bid and also below the bid. They're coming in as sweep orders, and there was a ton of premium behind it, 1.9 million, 1.2 million, 1.5 million, etc., etc. So we know that there is a bearish emphasis coming out of the gates. And as you can see, that first 50-minute candle was very bearish, and actually it opened right on the trend line that I had previously. You could see right here, open exactly on it, and it was unable to hold the trend line, which is very critical. Very bearish open for the first 50-minute candle, which was also supported by a lot of this call selling. Not a good sign for the day on Tesla. This is just a tip that you can use whether you're a day trader or also just a shorter term swing trader. Whenever you see an open like this where the first candle dumps below a key trend line along with a lot of call selling to support it with a ton of premium behind it as well, tends to mean that the trend will end up down. In this case, it did continue down for the rest of the day here. So as of now, just based on the daily chart, actually, if we go over here, you can see hard rejection off this trend line. It doesn't look like price wants to get above anytime soon. You'd have to see a clear break back above roughly 257, 258 in order for that to be the case. But at the moment, clear rejection here. Its next key support is around 240. Remember this demand range that I had previously? It was a previous supply range that we had to break above, and we did break above on August 29th of last week. This will be the next key support. If price is unable to hold this, we will see a lot more downside. And the reason I brought this up in today's video is because if Tesla sees a lot more downside, if we were to go below 240, the market is likely to follow to a degree, because Tesla's price movement has actually been known to front run kind of what the market will eventually do by a day or two. It's not always the case, but it certainly can be a very nice confirmation signal. So watch if there is a very clear break below 240, especially on the daily chart, then we can see a lot more downside, because it would warrant a potential double bottom around 213, 214 again. And of course, if Tesla continues to downside, there is a heightened probability that we can see the rest of tech and also potentially the market follow that as well. So this is something that I'm going to be watching closely for confirmation signal of what the rest of the market might do here heading into the month of September. So keep your eyes on this. And lastly, I do want to mention the VIX. We saw an insane amount of downside on the VIX on Friday, and just for the week in general. Like, look at this, it was down negative 16.5%. So we did see vol fall as I was looking for the past 2 weeks, especially coming off of Jackson Hole. That was my main goal, to see after Jackson Hole vol get crushed, which we did see, and actually surpassed my target. My target was just about sub 14, which would have filled this gap from over here, and we did see that, and we saw a lot more, and it continued to the downside all the way to around 13. So what's likely going to happen here is, just because of how far down we are, and after such a hard rejection of my trend line and the 1760 pivot, what's probably going to happen is we see a dip lower than the previous low of this year so far. And then after that, you're definitely going to want to watch for signs of an uptick. If we do see an uptick from there, it can kind of act as a contrarian signal, the fact that we made a new low on the year, because that clearly shows that participants in the market are mostly risk on. If we do see that, that is a good signal of potential pullback again here on the S&P 500, which is what I'm watching for, what I was talking about earlier in this video. So a lot to watch for this week, especially if we can stay within that SPX range, as well as if we do see price tick below the low of year and then begin some form of an uptick after that. Regardless, it is a waiting game at the moment for a nice opportunity. It looks like the opportunity is coming up soon, but no reason to rush it at the moment. We'll see what happens starting off this week, especially a shortened week. Like I said, typically whenever you see these holiday weekends that are short, tends to mean that there's less volume, which can actually be a benefit to the bullish side in this case. But of course, we will see what happens as long as we stay below that supply zone I showed you on SPX. Continue to watch volatility. If we do see a bottom form around here, those are two very critical signals that will provide us confirmation on when it is time to short. But anyways, I will see you guys in the next video.